Gold at an all-time high. Will it keep rising? Gold has shattered records, reaching an all-time high of over $3,100 per ounce. But why is this happening? And more importantly, will prices continue to soar, or are we headed for a correction? To understand this, we need to look at the key factors driving gold's rise. Why is gold surging? Gold has always been seen as a safe haven asset. When uncertainty rises, investors flock to gold to protect their wealth. Right now, several global factors are fueling this surge. The first major factor is geopolitical uncertainty. Around the world, tensions are rising. Conflicts in the Middle East, ongoing tensions between major economies, and fears of new wars create uncertainty. When markets feel unstable, investors look for something reliable. Gold has been a store of value for thousands of years, and in uncertain times, it becomes more attractive. The second reason is the United States tariffs and trade policies. The United States recently announced new tariffs on certain imports, increasing trade tensions. When trade wars escalate, the global economy can slow down. Investors worry that these policies will hurt economic growth, making gold a more appealing asset. The third factor is inflation and economic concerns. Across the world, inflation has been a growing problem. The cost of living is rising, and central banks are struggling to control it. When inflation is high, the value of paper currency decreases. Gold, on the other hand, maintains its value over time, making it a strong hedge against inflation. Many investors are buying gold to protect their money from the effects of rising prices. The fourth key factor is central bank and institutional demand. Governments and large financial institutions are buying more gold. Central banks in countries like China, India, and Russia have been increasing their gold reserves. When big institutions buy gold in large quantities, it pushes prices higher. All of these factors combined have driven gold prices to record highs. But the big question remains, will gold continue to rise, or are we nearing a correction? Will gold keep rising? Experts are divided on this question. Some believe gold will continue its upward trend, while others predict a possible decline. On the bullish side, some major banks and financial analysts believe gold prices will keep rising. Goldman Sachs recently raised its gold price target to $3,300 per ounce by the end of the year. Their reasoning? Strong demand from central banks, rising inflation, and global uncertainty. They believe these factors will continue to drive investors toward gold. Other analysts point to exchange-traded funds, or ETFs, which have been seeing massive inflows of money. This means more investors are putting their funds into gold-backed assets, which increases demand and supports higher prices. But not everyone is convinced that gold will keep climbing. Some analysts warn that we might be approaching a peak. Morningstar, for example, predicts that gold prices could fall to around $1,800 per ounce in the next 5 years. Why? Because when gold prices rise too quickly, some investors start selling to take profits. If inflation slows down or economic conditions stabilize, demand for gold could decrease. Another factor that could put pressure on gold is interest rates. If central banks decide to raise interest rates further, it could make gold less attractive compared to other investments, like bonds. Gold does not pay interest or dividends, so when interest rates rise, some investors move their money into assets that offer better returns. So, should you invest in gold now? Or is it too late? What this means for investors. If you are thinking about investing in gold, there are a few important things to consider. First, think about your strategy. Are you investing for the short term or the long term? Gold is an excellent hedge against inflation and economic uncertainty. But historically, it does not always outperform stocks or other assets over long periods. Second, diversification is key. Experts recommend that gold should be a part of your portfolio, but not the only investment. Holding a mix of assets, such as stocks, bonds, and real estate, helps balance risk and reward. Third, consider market timing. Right now, gold is at an all-time high. Some investors believe it will go even higher, while others expect a pullback. If you are planning to invest, You may want to wait for a dip in prices before buying in. One option for investing in gold is physical gold, such as gold bars or coins. This gives you direct ownership, but it also requires safe storage. Another option is gold ETFs, which allow you to invest in gold without physically owning it. These funds track the price of gold and can be traded like stocks. Finally, some investors choose gold mining stocks. These can be more volatile, but offer the potential for higher returns. Final thoughts. Should you buy gold now? Gold's future depends on global events, inflation trends, and investor sentiment. While the current rally has been fueled by uncertainty and strong demand, it is important to remember that markets move in cycles. If global tensions remain high, inflation continues to rise, and central banks keep buying gold, then prices could continue their upward trend. But if economic conditions stabilize and interest rates rise, we could see a slowdown or even a decline in gold prices. So, what do you think? Will gold continue to rise, or are we headed for a downturn? Let us know your thoughts in the comments. And if you enjoyed this analysis, be sure to subscribe for more market insights.